Good morning, Bob from Trade Genius here. It's the 18th of February, and we survived the onslaught of Storm Lucifer. Just amazing. Now that's even a name that people are happy to banter about. How far we sunk. But anyway, I wanted to talk about the market in a more strategic level because everybody you talk to now is just basically saying, we're going to the moon and happy days are here again. And then I saw some people saying, hey, we had a 2-year hiatus. Now we're going to go into, we're going to do a trend move, basically take the market, the 180 to 220 trend and take it from 220 to 260. But they conveniently forget that it took 2.5 years for that rectangle to form, and the expectation is we're going to get there in another month. I don't think so. So I want to take a step back further. I want to get a little bit more perspective, and I looked at, and this is a pretty good trading truism. Markets will run in a range, and then they'll break out of the range, and then that range gets expanded equidistance over time. And what we had here is for 15 years is we had a range bound market. And so you had this rectangle here, which basically is like a 75-point move. And then it broke out of that range in 2013 when we went to new highs. And then here is a repeat of the rectangle. And so that rectangle would have took us to about 225, and now we blew it up all the way to 235. Well, that's kind of not how rectangles work. And so you can see here when you look back, you have it poked above the rectangle here, came back down, touches. This is kind of the first shot at it. So you're like, okay, so this range held, okay, but this one needed to be tested. So it bounced down here, and then it came up here and tested it again, poked its nose out, went back down, tested the bottom of the rectangle. So now you have confirmation this is truly a rectangle. And then when it came up here, and then blew through here, and then blew up, then you can say, okay, now we have a new range. All right, so now we have this new range, and these are yearlies, by the way, is now we pushed up through this other rectangle. So we went, something that took us 16 years to do, we did in 1, 2, 3, 4, 5 years. And that's, borders on the ridiculous. And so expectation is that it's going to come back down and test the bottom of this range. And so my expectation here is that by the time this year ends, it's going to look a lot more like this candle. Okay, and then it'll come down, and first stop's going to be, I put the pivots in here, is 76% of the time the market will test its pivot. And so, we opened the year well above the pivot, and it's now challenging the R1 pivot. Now, can it get to the R1 pivot without, sure, but it doesn't have to. But it sure can, and then I would expect it to come back down into here, and then we'd have to wait and see if it'll challenge the R1 pivot or if it's going to come back down. But my expectation is that we're going to come back into this rectangle, and logic will tell you that we'll come down and test the bottom of this rectangle. It's just how the markets work, okay? And then Katie bar the door if this rectangle breaks, because then we're going to go all the way back down to this rectangle. So I thought I'd share that with you. I thought it was pretty interesting. And I didn't really realize it. I assumed that the rectangle would be bigger. And I was surprised that we blew right through it. And, just so you know, too, we've really not had a down week since second week in November. I mean, really, maybe one couple of dojis. But, we've been going straight up over 10% market move in 2 months. We're on an impossible pace. So people are being leveraged out here that are trading. and it's going to be a nasty reversion to the mean. So taking a look at what I mean by that is I don't know if you guys ever heard of a Sornet curve. It's basically acceleration of acceleration, and this is XIV, which is already prone to want to go up because of the contango, and what's been happening with XIV. What it looks at is that the fund managers need to create a constant maturity for the VIX contract, and they take the average between 30 and 60 days out. But if the 30-day is below the 60-day, they have to sell volatility in order to maintain the weighting, and that means XIV goes up. Well, it didn't take a genius for these algo writers to say, well, why don't we just keep shorting the front month and we'll buy the next month out, and we'll create a contango. And so far they have not been burned where they have to cover that near-term contract short, and which happens, if you look, and I'm going to show you the next chart, it happens fairly regularly where those contracts will explode up about every 3 to 4 months, and so we're absolutely due. But just look at this from just a Marvel perspective. It accelerated, it creates acceleration. Now we're basically going straight up. Can it go up even higher? My dare to dream on XIV is that it could actually strike 90. I didn't put the R3 on here, but it absolutely could strike 90 if they try to drive the VIX down into the mid nines. So it's definitely doable, and maybe that's the plan, to take it to the R1, which I reported on before. That would be like if SPY hit 241, then I think it's done. Everything's done. And that would probably drive XIV up to 90. So I'm not saying it can happen. I'm really just talking strategically. But if it did happen, it's going to happen fast. And then this thing you're going to see a move like this, or you're going to see a move like 2011 where they just have to unwind all their risk parity contracts, and it could be a couple months. And XIV can literally fall from $70 and lose 80% of its value, and you're talking losing $56 on this thing. You could drop to $14. These things have happened before. It's lost 80% of its value in 2011, and over a 3-month period of time. So in some ways, I wish it really would do that, because then it would just give us a great opportunity for it to move up again another 400% like it did before. But we'll see. But I thought I'd share that with you. This is absolutely unsustainable. People are out over their skis. They're way leveraged doing this, and somebody's going to call them on it, or they're going to have to call it in. And I think we had our first break with this Catalyst hedge fund, which broke the sold call suppression. And now we'll see if they aren't going to be so aggressively selling calls next month. Which, when you sell a call, somebody has to buy that call, and if it's a market maker buying that call, they're offloading that. They're offloading their risk. So, when they unwind it, we'll expect the market to do reverse. And now that they don't have to, the contracts are over for February, we could see a reset into March. Even if this continues higher, March could just be a bad month on the March to the R1, and for this to go to 90. Just, bear in mind. And then the last thing I want to show you is why I think this might happen. Is that here's basically a falling wedge on the VIX contract, and I think it meets the criteria. The slope of the bottom is not nearly as steep as the slope on the top. I would say we also passed the rule test of 70% of the way through the wedge, and now we want to see if we break out. If we break out, the bottom becomes a parallel line, and we could take the VIX back up to 20, and that would just be absolutely probably pretty tough on the market. And so you could see when these things had bounced before what it's done to the SPY. And it's been pretty regular. This has been a pretty long dip. And you can see when you have long dips like this, they did it in 2016 after the big scare with China, is that it brought it down here, and then by the time summer came, they had hit it again. And these are news events, but they're always looking for news events. In March, we have a lot of news events coming. We have the Netherlands vote, we have the French vote, we have the debt ceiling vote, and we have the March Fed meeting. So if they could suppress volatility through all that, then I'm just pretty much will sit in amazement and just watch this thing go to the moon and wait for it to come back down. So anyways, Bob from Trade Genius. You guys have a great day. And since it's a long weekend, I'll be putting out some more videos with some charts a little bit later. Thanks, bye.